Hey, Tops. How's it going? My name's Matt Nord,
And I'm Evan Sayner. We're both with Northwestern Mutual.
and today we're going to talk a little bit about investing. So first, Evan, I want to ask you a question. What are the reasons for investing?
Yeah, so I mean, there's a whole slew of reasons for somebody wanting to start investing. But really, what we're going to need to do first is we're going to need to identify what's your financial goals. Then next, we're going to go into, what's the time frame of these goals? Are they short term, mid-term, long term? And really, those parameters are short terms about 1 to 2 years, mid-terms about 2 to 10, and long terms anything 10 or more years. So those are kind of our first steps of figuring out what are we going to be looking at. Then the next question we need to ask ourselves is, what are our investment options? So Matt, can you tell us a little bit more about that?
Yeah, so really, it comes down, you can either lend or you can own. So you can lend by buying a bond. So in this case, you're providing money to a company or the government. In exchange for your money, they agree to return your money on a specified date in exchange for interest payments. So that would be the lending your money. The other option would be to own or buy stock in a company. So in this case, you're buying shares or partial ownership of a publicly traded company with the hope and expectation that over time, the values of those shares will increase. So mutual funds and ETFs, those are pooled investments that can have a wide variety of predetermined and diversified portfolios. So really it comes down to considering your goals and the potential sales charges and fees associated with these types of funds. So next question I have for you, Evan, is what do you need your money to do for you?
Okay. So really, it's going to come back to really what's our time frame again. So that's really big in investing. But really, there's three main investment goals for our money. The first is going to be safety. Do we want to keep these dollars safe where they're keeping up with inflation? And we call that capital preservation, where we don't want to take too much risk. And this is a good parking place, maybe an emergency fund. That's kind of what we're thinking about here. Then next, we're looking at income. So how can we use our money to drive income? So really, we're going to be looking at creating something that's going to be especially important for you to consider with your portfolio. If we need regular scheduled payments, maybe to supplement a salary, retirement benefits, anything along those lines, that's what we're going to be looking for those investment dollars to do. Then the last, growth and capital appreciation. These investments are going to be focusing on the growth of our overall investment over the long term, such as funding a child's education or even retirement planning, in which we have multiple years to ride out the ups and downs of the market over time. So the next question is, how do we feel about risk? What are some things we need to understand about risk in investing, Matt?
Yeah, so really it comes down to just understanding that risk in the market is subject to your investment. So given an even more important reason to kind of have your goals spelled out, since you can be aware of the different risk tolerances for your different retirement accounts or investment accounts compared to saving for something like a new home that's going to be a little bit more shorter term. But really, you want to balance the risk and reward and understand that those do go hand in hand. So without some measure of risk, it would be as easy to achieve these returns, but you'll need to create the life you want to live for yourself in the future based off your risk tolerance. So, and then the next kind of question we ask Evan is how involved do you want to be in your investments?
Yeah, so I mean, there's really three main routes that you can take. You can take the do-it-yourself approach. There's many online services that allow you to get started for very low cost, as well as having complete control over your investment decisions. So for beginners, this can also be a big drawback with not having the knowledge or the education to get started. Then the next, you can use an automated service. Automated services are a great, easy way to go ahead and create a diversified portfolio with relatively low costs and automatic rebalancing options, sometimes depending on the service. However, these pre-selected portfolios might not always meet your unique investment goals. And lastly, working with financial professionals like ourselves. The way we approach it is we're going to take the time to sit down, understand your unique goals, and then help you create a personalized plan that will help you meet those goals. However, not all financial professionals are alike. That's a big thing to note. And some potential considerations to think about whenever you're choosing your advisor would be, what's their fee structure like? What's their experience levels? And what kind of qualifications do they have in professional designation? So those are all really big things to consider. And
And if you guys ever have any questions about starting investments or any, want to educate yourself on any other topics, please don't hesitate to reach out to Evan or myself or any financial professional, and we are happy to help. Go Tops.
Go Tops.